Hey everyone, welcome back to Corporate Decoder. Today we're diving into a document so twisty it's like a pretzel dipped in financial jargon. Get ready to decode Camber Energy's latest 10Q filing because someone had to refile something and that's never good news. Basically, Camber Energy had to refile their financial report for the quarter that ended in September of last year. Why? Because their subsidiary, Simpson Maxwell, messed up how they were counting revenue from a power unit delivery contract. Let's see what other problems might come out of this. So Simpson Maxwell thought they could recognize revenue bit by bit as they completed milestones on a contract. But Camber realized that those milestones didn't really meet the rules for recognizing revenue, so they had to take all that money back and start over. It's like baking a cake thinking you can sell each ingredient separately and then realizing you can only sell the whole cake. Also, they messed up the cost too. Because of this mistake, they had to fix a few things in their original report. That includes the financial statements themselves and management's discussion and analysis, which is where they explain what's going on with the company. New certifications from the top accounting and executive people were also required. Okay, now let's dive into the numbers and see how Camber Energy is really doing. First, let's check the balance sheet, which is like a snapshot of the company's assets, liabilities, and equity at a specific point in time. It can get confusing with a lot of these details, so let's look at big numbers, not every little amount. Looking at the asset side, their accounts receivable net went from about $8.5 million at the end of last year to about $5.9 million at the end of September this year. So basically, they are making less sales on credit. Here's a concerning one, goodwill. At the end of last year, they had almost $35 million in goodwill, but now it's basically gone. On the liabilities side, accounts payable has increased by almost $3 million since the end of last year. This means Camber owes its suppliers more money than it did before. Finally, entity common stock shares outstanding is at about $272 million, meaning that about twice the amount of stock is outstanding as compared to the year prior. Let's move on to the income statement, which shows how profitable the company was over a period of time. Revenue from service and repairs is mostly steady at over $3 million compared to the prior quarter. Compared to the previous year, oil and gas sales revenue have drastically decreased. It's at just a few thousands of dollars, which is far below last year's total. They even recognized a loss on disposal of assets to sell oil and gas. General and administrative expenses are up over last year. These are basically running the business and keeping the lights on. Another important line is the change in fair value of derivative liability. This number can jump around a lot depending on the market, but it's also over $10 million. This one is a bit hard to understand, but very important and comes from complex agreements that Camber is in. And finally, earnings per share diluted is a loss of about 35 cents per share, almost twice the 18 cents loss of last year, while also having 3x the shares, meaning the company is drastically underwater. Moving on to the statement of cash flow, which is one of the most important components that tells you how cash moved into and out of the company. The company is recognizing some losses in the foreign currency translation adjustment line. Also, the company had some money come in from the proceeds from sale of oil and gas properties, which means they are selling assets to get more cash. But overall, the trend isn't so good. All this cash outflow results in a net decrease in cash of more than $1 million compared to the previous year. Now let's go on to note 6 on their filling, preferred stock. They have several types of it to raise money. They must give more shares for the conversions on this stock, a total value of about. Even better is they have to reserve another $6.9 million in common stock to be issued related to more conversions of Series C, meaning the share number could keep going up, which can hurt shareholders. That was mostly the financials, but there are many other notes that are important as well. For example, they have a big agreement in their clean energy and carbon capture system that they license to utilize its patent rights and know-how related to stationary electric power generation. Viking Ozone is in the waste disposal business, which may be valuable and worth it. Who knows what will be needed in the future? Maybe that will be valuable and worth even more. They paid $2 million for the rights of the tech. But of course, what's a corporate decoder without a nice bit of legal drama? The company had a class action lawsuit that was previously ongoing but was terminated for now, with the parties submitting the agreement for the court to sign. So after that crash course on the financial report and those other important items, what is to make of it? Well, it's complicated. Camber's future is still not completely clear. They've sold assets and shifted their focus, but they are underwater and their stock is very low. And remember that debt. Some of it is tied to a volume-weighted average price, which puts the company's common stock in control of this performance. I do not like this type of stock instruments. On the bright side, the business seems to be trying to find direction to be on good financial standing. And they did cut a lot of the operating costs. Thanks for watching. Remember to leave a like and subscribe. Let us know in the comments what other company reports you'd like to see us decode.